be careful of so-called dividend growth stocks. Some dividend growth stocks are a good investment, in my opinion. In my opinion, if you have a stock that has a 5% yield or more, and it increases the dividend every single year, that's not a bad investment, in my opinion, because it'll help you with a hedge against inflation. If you have a stock that's a dividend stock that's paying you 1%, and it increases its yield by 20%, congratulations. You have a stock that now pays 1.2% yield. I'd rather get a 5% stock, and then if they cut or get rid of that dividend, then look for another stock. It might be a little bit more work, but I really need income now. I don't like those companies that say, well, if you buy high yield stocks, you don't know what you're doing for dividends. It's called raking in the dough. I was looking at one of the so-called financial companies, and I wanted to see some dividend growth stocks. And they had 67 dividend growth stocks, but they refused to put the yield. Why would they put you have to do half the research now? You have to do half the research. You have to take their lists. I think O was on their list, which is Realty Income. I've been watching that stock for years. It hadn't been 5%. Now I think, as of this upload, when I looked online, it was 6%. O has a tendency to raise their dividends. Now that they're over the threshold of 5%, it may not be a bad investment now. But I don't want to hold the stock for 20, 30, 40 years before it breaks the 5% barrier. Why would I do that to myself? Why would I do that to myself? I don't like the companies that suggest that you buy all these low-yield stocks because they increase their dividend over time. Okay. So now you got a stock that's producing 3% that you held for 10 years after you purchased it. My bar is 5%. Because if you hold the stock for 20 years at 5%, you break even. I'm not worried about the stock going up in price or whatever. I'm not an equity investor. I'm an income investor. Yeah, it's good to have the stock go up in price after you lock in the yield. It's fine. But for these people who say, you have the income increase on the dividend every year. It doesn't matter if it's 1%. From my perspective, they've got a mental problem. They need to remove their cranium from their anus. You need money now and in the future. So I would like to go, so if you're trying to find a stock, okay, like I'm trying to find stocks that are increasing their dividends, that's fine. But make sure that they at least have a 5% yield, otherwise it's really not worth it. A 20% increase on 1% is 1.2%. That's not something I want in my portfolio, 1.2%. If I have one, it's because they cut the dividend. Okay? And I just didn't sell it yet. Like Frontline used to be a decent stock 2-3 years ago. They would import oil, and they had a good time when oil was just really, really, really low, and they used their barges as storage places for companies that wanted to bring their oil into the United States, and it was good. And then the price of oil went up, or they were able to unload it, and then for 2 years they didn't have a dividend. So Fro at that time was not a good investment. I sold 99 of my 100 shares. Now I had to purchase a couple of them because I have 3 shares now. But now I'm looking at Fro again. So yeah, certain stocks will cut their dividends, sell them and buy other stocks. These people who have their cranium up their anus to think that the only way, you're less experienced if you're a yield chaser. No! I want money in my pocket now. not 20, 30, 40 years from now. Oh, well, you have to be patient. Yeah, I'm patient. Every month I have to wait every month to get a payment on a lot of my stocks. They're monthly. I'm patient. I have to spread a few different monthly stocks so I don't have to wait a week or 2 weeks. Well, I might have to wait a week or 2 weeks to get enough money to invest again. I just have to continue to buy more stocks that have different X dates that pay on different days, so I'll have a constant stream of money coming in. I'm not going to do that with a company that has a 1.2% yield. There was one company that had like a 4.65 yield, a 6% yield, and a 5% yield. I would name the company, but then it dates the video. So what I do is put in the ticker symbol, the word DIV for dividend, HIST for history, and if I have to, I put in the word stock. Or you could put dividend history, put the stock ticker, dividend history, and then you can look. But don't stay at one. Don't go to just NASDAQ. You've got to go to 3 or 4 different places to find out what the dividend history is. There are stocks that raise dividends every year, and that's great, as long as the yield is over 5%. I do not like the company that said that you're less, I forget how they phrased it, like you're less experienced, I believe they said. Yield chasers. Yeah, I'm going to chase yield because I want the money in my pocket now. Okay, now I like stocks that raise their dividend as long as it's at least 5%. So I have some stocks that pay at least 5% in my portfolio. But I focus on the ones that give me 10, 12, 14, 22, 25, 23, 24% yield. Sometimes they will cut the yield. I know how to sell a stock and buy another stock. These people who want you to buy and hold for decades before the money comes in is not a good deal. I wouldn't want somebody to tell my 20-year-old son, if I have a 20-year-old son, if I get married and I have children and in 20 years I have a 20-year-old son, I am going to make sure he knows not to have 100% of his portfolio in 1 or 2 or 3% stocks that raise their dividend every year. So by the time that he's 60, he'll be able to eke out a living. I'd rather show him the stocks that are paying 12 or 15% now, some at 5 or 6%. As long as they raise their dividend and they have at least a 5% yield, I might be on board with that stock. But I'm not going to tell someone, that's a 3% yield. Wow! They're going to add 10% next year. Now it's 3.3% yield. Wow! That's not inflation fighting. If the yield is 5% or more, and it goes up 20%, that went from 5 to 6%. When you locked in your price at 5% and it goes up 20%, that's a 6% yield on the price that you paid at that point. That's a good deal. But to tell someone to wait 10, 15 years to get a decent yield is, in my opinion, that's bad financial advice. I wouldn't want somebody to give my son or daughter bad financial advice. Oh, you have to wait 30 years to get a good dividend. No, you don't. You have to work hard to find the ones that are paying decent yields of 5 or 10. I like the base for a food stock I would like to buy. If it's a food stock, like BG Foods, I want to have at least a 5% yield. I like food stocks because you can eat. So if a stock like Kraft is under 4%, I don't plan to buy that stock, even if they continue to add to their dividends. Now, I know that BG Foods had a dividend cut, but now their yield is still over 5%, so I'll buy more BG Food stocks. Long term, people are going to eat. And if I buy a stock like Kraft and it's raising their dividend, I don't know if they raise dividends all the time or not. I'm not looking at Kraft because the yield's too low. But even so, if it's going to take me 15 years to get a 5% yield, look at how much inflation has taken away from my income. Look at how much money I lost because I chased a stock that raises their dividend every year that's below 5%. I am out of money because of bad advice from somebody that calls me inexperienced because I'm a high yield chaser. I don't mind doing gymnastics in stocks. If the stock doesn't continue to bring in the money, I can switch to another stock because I know how to sell it. Wow! You can make a consistent, if you have $1 million and you're at least making 7% on your income, that's a $70,000 a year income. That's a lot better than having $1 million in a stock that only gives you 2%, and that's 20 grand. Give me a break. Bad financial advice from these companies that want to say, oh, you're inexperienced because you're chasing yield. No, you're inexperienced. Well, your experience hasn't proved valuable at all. Because maybe you've been doing that for 10 years and the people aren't barely making any money. But you're okay because you're their financial advisor, and if you get 5% of whatever they have, that's a good deal for you. It's not a good deal for them. My personal advice to me, I'm not giving you advice at all. I'm not your financial advisor, but to me, I don't want something that's going to pay me less than 5%. Even if they raise the dividend every year. If they have a stock that's paying 5%, like, Realty Income, I think it's at 6% right now. They have a tendency to raise the dividend. That's a good stock for me. I've been watching that stock for a while. I refused to buy it when it was less than 5%. Now it's around 6% because the market tanked. That might be a good long-term investment. I prefer stocks that pay 7, 8, 9, 12, 15, 22, 25%. But I also have some of these low-income stocks that only give you 5% or more. And that's for stability. But if they happen to raise the dividend and I got locked in at 5% and now it's 6 or 7, that's good too. But that is not a good way to fight inflation, to have a 2% stock go up 10%. All that does is waste 90% of your money. Seriously. I want a stock that's going to give me 5% or more. If it's a dividend aristocrat or whatever they call those things that give you more and more and more money every year for the last 25 years, make sure that yield is at least 5%. Then it might be a good deal. It's not going to be a good deal if it's giving you 1 or 2%. I looked at Clorox before when it was only giving 1%. I wouldn't want to own any Clorox at 1%. I wouldn't mind owning some Clorox if it gives 12%, 10%, 5%. 1% is too much of too low for me as a yield. I would never, if somebody were asking me say we're sitting down in a group and we're all co-investors and we're all in an investment group and they ask my opinion, I would not give them an opinion to buy a 1% stock. Malpractice. Like, subscribe, and share this video. Please. Until I learn how to put music on these videos, these videos don't have music. I'm going to upload this and be happy about it because dividend stocks are for you to have money. Not to have money 30 years from now, but to have money now, next month, and 30 years from now. Dividend growth stocks that are below 5% to me are a joke. 1%? Oh, now it's 1.2%? And then 5 years later, oh, it's 3% now. And 9 years later, oh, it's 4.9%, almost ready. No. Start out with, for me, my lowest that I want to look at is 5%. If it's 4.97%, I might put in a limit order to make it 5%. But no, I'm not going to rush off to 1 and 2 and 3% stocks because they're eventually going to give me 3.5%, 4%, 5%. Dividend growth stocks are a good investment, in my opinion, if they're at least 5% or more. because they will grow. They will help fight inflation. My high yield stocks of 25% or 23% or 22% and inflation's less than 5 also help fight inflation. Have a great day. Thank you very much for your time. Comment down below. Please find a different financial advisor if they're going to, I'm not your broker. I'm not going to give you financial advice, but I wouldn't want somebody to give advice to me to take a 1% stock and wait until it becomes a 3% stock in 15 or 20 years. Find a good financial advisor, one that's going to make you money short-term and long-term. Have a nice day. In my opinion, that's what I would do. Have a nice day. Thank you very much. Comment below. Subscribe. Share. You can comment too. Share, comment. All that good stuff. Subscribe, share, and comment. You should take my videos and put them... Have a nice day.